Most people do not understand their auto insurance until after there's been a crash. Stay tuned today so you can learn what you need to know before you have a crash. Welcome back, everyone, to the Lacrosse Lawyer. I'm Craig. How are you today, Leah?
I'm well. How are you?
I'm great. Recording the weekend before Thanksgiving.
Ooh.
And as you can see, we're actually both in different places today. You're at home. I'm at my other office. And so we wanted to record a video today. Today, we're talking about auto insurance. And it's kind of one of my favorite topics. It's not a super exciting topic, but it's a topic I really like because it's something that we all pretty much have, and most people don't understand, and I deal with it all the time after someone's been in a crash. And there's so many little things that I think if people understood their insurance better might be able to set themselves up for in a much better situation in the unfortunate event that you need it. Okay. So let's talk a little bit about auto insurance. And if you have questions at any time, just go ahead and chime in. But I kind of wanted to kind of give the big picture, and then we'll kind of drill into the details. Okay.
Yeah.
So in most states, let's just talk about Wisconsin, Minnesota, and Iowa. If you're going to have a car on the road, you're legally required to have auto insurance of some sort. Now, how much insurance, the type of coverage varies by states. Wisconsin's requirements, Minnesota's and Iowa's requirements, as well as other states, differ greatly in terms of the type of coverage you have to have, the amount of coverage you have to have, and in fact, the insurance structure could be very different. So Minnesota is a no-fault state. Iowa and Wisconsin are not. So those are fundamental differences in the structures as well. But it's required if you're in those states. And one of the other things is really I find fascinating because I practice in all those states, and sometimes I deal with people that are from one state and get involved in a crash in another. If you purchase your insurance in one state and then you get involved in a crash in another state, your insurance automatically rises up to, if necessary, to include the minimum limits that are required in another state. So I don't have no fault coverage under my policy because I'm in Wisconsin, but if I go to Minnesota and get an accident there, my policy is required to add no fault coverage. Okay, that's kind of how that works. And I think there's like three big categories of insurance when you think about your auto. The first, and this is actually the main reason we have auto insurance, but it's probably the one we think about the least, is it protects you from a liability standpoint if you cause a crash and someone else is injured. So it's there in case you get sued, basically. So it's liability protection if you cause a crash and someone else is injured. So that's kind of number one. Number two is it protects you if you're involved or injured in a crash, typically caused by someone else, although with no fault, it can be there even if you're at fault. So there can be protection for you and your own injuries, as well as your family members, anyone else that's in the vehicle with you, if you or your family is injured. So that's kind of number two. And then the third one is what I kind of lump all in together, which is property coverage, financial. So the value of the vehicle, repairs, towing, rental car, maybe if you have personal items in your car that are damaged or destroyed, trailers, maybe if you're pulling something. So property is sort of the third big bucket of insurance. Okay. And so it's helpful to, I think, orient yourself to those three buckets when you're thinking about insurance. And so what I wanted to do is kind of like start big picture and kind of lay down the different types of coverages that tend to fall into those buckets. So let's start with liability. So that's the one that I talked about first. Liability, again, is if you are involved in a crash that you cause and someone else is either injured or their property is damaged, it basically pays someone else's damages. So that's liability. So that is both bodily injury as well as property damage coverage. Now, in Wisconsin, for example, you have to have a minimum of liability insurance. And when we talk about like minimum limits, like the mandatory insurance, it typically is only for that liability. It isn't necessarily for the coverage that you have for yourself or even your property coverage. The only one that typically is mandatory is liability insurance. And so I believe in Wisconsin, the minimum limits are 25,000. 25,000 are the minimum limits. I believe Iowa is similar. I can't remember off the top of my head what Minnesota's is, because they are changing. They do change sometimes. There was a
Mm.
while in Wisconsin, I believe the minimum limits were 100,000.
Oh.
It tends to change with the governor and the legislature. If it's a more, let's say, right leaning either governor or legislature, they tend to drop the mandatory minimums. If it's, let's say, more of a Democrat or a liberal, and they tend to raise them. So that's why they actually do change, kind of go up and down over time. So that's kind of liability protection. It covers someone else's injuries
Mhm.
as well as damage to their property. Okay.
So if those minimum limits change due to the different administrations, do the premiums that people pay change in
Oh, yeah.
response to that?
Yeah, I mean, you're paying for what you get, so that's always
Mhm.
the trade-off. Is I mean, if price didn't matter, everyone should have millions of dollars in insurance, right? I mean, you
Yeah.
should have unlimited insurance just in case you severely injure someone else or severely injure yourself. But of course, the more coverage you have, the more the risk to the insurance company, and the more they have to charge you and everyone else to sort of spread out that risk. So there's a definite relationship between the amount of insurance you have and how much your premiums are. So so that's kind of the simple liability. The other thing I will add about that too, that most people don't understand, is if you are involved in a crash that you cause or someone else accuses you of causing, now a lot of times there's parties dispute who was at fault. But if there's an allegation that you were at fault, one of the maybe the key benefits that you get out of liability insurance is it provides you with a legal defense, which means that your insurance company will find and hire and pay a law firm and lawyer to defend you, to show up for you in court, to challenge the plaintiff's case, so challenge the case of the person bringing the claim against you, and to try to protect you from a legal standpoint, and if possible, settle your case within the liability limits of your own policy. So the minimum limits, as the name implies, are the least amount you're required to have, but you could always have more, and I strongly encourage people to have more. Don't use the minimum limits as the benchmark for what you get, because $25,000 just doesn't go very far if there's any kind of significant injury and any kind of medical care. So that's liability. So let's talk about personal injury for yourself and your family. And this is where I would say there are kind of three main things to think about for your own insurance for you if you're involved in a crash that either wasn't anyone's fault or was someone else's fault. And the most basic type of coverage is MedPay. So MedPay is short for, I think it's medical payments coverage, and it's there to provide, it's there just for medical expenses. Typically, what we think of is if you have to take an ambulance ride to the hospital, if you have to go to the emergency room, it's there to encourage people to get medical care after a crash, even if they may not have health insurance or a way to pay medical bills. It's there to incentivize people getting sort of that urgent, immediate precautionary care that you might want to have after a crash. So it's there to cover ambulance, emergency room visit, maybe follow-up, maybe a little chiropractic care. It tends to be a smaller amount. Maybe it's $500, maybe it's $1,000, maybe it's $5,000, but it tends to be on the lower side of things. So it's not going to cover all of your medical expenses if you're badly injured, but it kind of gives you something right out of the gate to get checked up, like I said, we don't want people to be afraid to go to the doctor because they're not sure how they're going to pay for it. So that's kind of what MedPay is. MedPay is that, and it's kind of it's not really no fault in the way that, let's say, Minnesota's is, but it's kind of no fault. And I think it typically applies if you're injured while driving or riding in your vehicle, it provides coverage for you. Let's say you fall asleep at the wheel or you hit a deer and you get injured. It's still going to provide coverage for you, even if there's no one to bring a claim against. But that's why, again, it's a small amount. It's maybe $1,000, $5,000, something like that.
Mm.
And what we tend to do, when I say we, those of us who represent people that are injured, I try to combine MedPay with someone's health insurance, to use MedPay to cover copays and out of pockets to make that insurance go longer. Okay. So
Oh.
that's I like to see people having decent size MedPay coverage. Just to give you an example. So it's probably how many years ago? 15 years ago, my second oldest child, my daughter,
Mhm.
it was my fault. We were moving a trailer around. We had moved houses and we had this trailer and we were pushing it up into a storage unit, and she was trying to help dad. She was this little kid, and the trailer, which was not hooked to the vehicle at the time, caught on a piece of concrete and the tongue went up and the back came down and it smashed her foot. And we had to go take her to the doctor, and she had to have kind of emergency surgery to fix that. Unbeknownst to me, I had like $25,000 med pay on that auto policy, and that covered almost all of that, because I don't know, because I had just switched jobs, there was something weird with the health insurance. So I had that med pay coverage there to cover that. And I was glad I had 25,000, because it was not super cheap to have surgery, kind of emergency surgery. So that's kind of what MedPay does, but it doesn't go very far. Like it's just kind of that initial treatment. And then what you're looking at is what we call uninsured and underinsured coverage. And this is something I see a lot of people like typically waive. And it's one of the most important insurance coverages you can have. I think underinsured and uninsured is more important than liability coverage, because liability is just kind of protecting your bank account if you cause someone else's injuries. Uninsured and underinsured is protecting you and your family if you're injured and need medical care or you're out of work, things like that. So uninsured motorist coverage is there. It's something you purchase. It's on your vehicle and it goes with you if you're involved in a crash and the person that caused the crash had no insurance, despite the mandatory minimums or whatever. So it basically, what it does is it puts in place insurance policy that essentially is for the other driver, but it's up for the amount of the limits that you had on your policy, but it's basically paying you for your injuries caused by someone else. Underinsured is almost the exact same thing, but it's in the event that the other person doesn't have enough insurance. So let's say someone has just the minimum limits of 25,000, but you're badly injured. It kind of it adds on top of the other person's minimum limits, their liability limits, and it adds additional coverage for you. So that's how underinsured coverage works. Now, uninsured and underinsured are not necessarily mandatory in a lot of states. I believe the current state in Wisconsin is, and there was a time when it was required, like insurance companies couldn't not give it to you. Now I believe they're simply required to offer it to you, but you're not obligated to have it, and you can waive it. There's a disclosure form your insurance agent or whatever will give you, and then you can decide, no, I don't want that. I strongly, strongly recommend that people get their uninsured and underinsured coverage, because from a liability standpoint, you can sort of control if you're a good driver. You can control if you're careful, if you pay attention, you speed, things like that, but you can't control what other people do. You can't control other people's driving, and you can't control the insurance they have. That's the big thing. That's why uninsured and underinsured is so coverage, because you can control that. You can make sure that if I get injured by someone that doesn't carry insurance or doesn't have enough insurance, I'm still protected. So that's why uninsured and underinsured is so important. The one thing I'll add is most insurance companies, and I would almost go so far as to say all insurance companies, don't allow you to have a minimum limits liability policy and then purchase a bunch of uninsured and underinsured coverage. So look, if it's for me, I might tell someone, purchase $25,000 in liability limits. If you don't have anything, you're a young person, you don't really have any assets, get $25,000 and then pay for $1 million in uninsured and underinsured coverage. Like that's what I would tell everyone, but they don't let you do that. Usually you can only get uninsured and underinsured coverage if it's the same amount of your liability limits. So it's, if you want that higher uninsured and underinsured coverage, you're going to have to purchase higher liability limits. But once you purchase the liability limits, it doesn't actually cost that much more to get the equivalent uninsured and underinsured. It's not like it doubles your premiums. It adds
Oh.
a little bit more. So it's not a great place to try and save money, I guess is what I would say. So that's kind of, that's kind of the second big bucket. So insurance coverage for you and your family if you get injured. And then the third one, and probably the one that most people think of when they think of their insurance, is that property coverage. You know, if you've got a loan on your vehicle, most of us probably have a loan on your vehicle. You're probably required to carry property coverage, quote unquote, full coverage on your vehicle, so that if it's damaged in a crash or you hit a deer or something like that, and the vehicle has to be repaired or is totaled, it covers that. It covers your bank basically in that event. If your vehicle is paid off, you may not have to have that coverage. But again, if the vehicle gets damaged, that's the type of coverage that you want to have. Usually for most of us, I have a couple of old vehicles that are barely worth the tires that are on them, but they still run. If they get destroyed in a crash, it's not the end of the world. It's fine. So I'm not going to carry property coverage on those older vehicles, but typically on your newer one you want. And then you're going to have deductibles and all that. And, you know, you maybe have roadside assistance, towing coverage, rental coverage, you know, things like that. The other thing I will say about that is gap coverage. So do you know what gap coverage is?
I'm assuming it covers for some sort of
Gap. Good guess. Good guess. So gap coverage is something that I also encourage people to get. Now, here's how gap coverage works. So let's say I purchase a new car and I pay $20,000 for that car. And let's say if I take out a loan, I owe $20,000 making monthly payments. And if I have full coverage on that, full coverage covers the fair market value of the vehicle at the time of the crash, not what you owe on it. Well, what we know is as we own vehicles, they depreciate over time as we put miles on them. And a lot of times, especially in the early part of your loan, it depreciates faster than you're making progress on your loan because you're paying a lot of interest at the beginning of your loan. So let's say you've had the vehicle for a year. Now you owe $18,000, but the vehicle's only worth $15,000 now, right? And then let's say you get into a crash, your insurance is going to pay $15,000 because that's the fair market value of the vehicle. And then there's going to be a $3,000 shortfall. That gap coverage covers that shortfall to make sure that if you have a bank loan on it of some sort, it makes sure that you can pay off the bank note. Okay, so that's what gap coverage is. You can usually either get that through the lender. It's something that you pay as part of your loan, or you can get it through your car insurance. Make sure you're not pay for both of them. Sometimes it's really easy. You might not be aware of it. You're paying for it on your loan and you're paying for it on your car insurance, but that's what gap coverage is. So it's an important coverage because I've seen it happen a lot where, you know, a newer vehicle, a year after it's purchased, there's a big difference between what is still owed on the vehicle and what the fair market value is. So that's something to keep in mind. So any questions about any of that so far?
Well, I think it's an appointment with my insurance agent that I need to make. So I wanted to ask, so what would you tell your clients based on your knowledge and experience before they get a crash? Like before they get into a crash, hopefully they don't get into one, but what would you advise them to do with your understanding and your experience? Like, what do you advise them?
I mean, don't save money on car insurance. Now, that's easy to say. I mean, I spend a lot of money on car insurance because I have good coverage and I have a lot of drivers. You know, I would tell people I would discourage anyone from getting less than like $250,000 or $300,000 in insurance coverage on your vehicle. And I encourage people to get to $1 million or more. That's somewhere. I have it through a combination of auto insurance and umbrellas. So you can there's different ways you can get to there. It's really important to talk to your insurance agent because like if you have multiple cars and then you have a home, if your home insurance is through the same company, you can get discounts or you can get an umbrella that can get you from, let's say you might have an auto policy. I think my auto policy is like $250,000. And then I have an umbrella on top of that that brings it up to $1 million or something like that, or more, you know. And that umbrella can be cheaper to get that next 750,000 in coverage because it's being spread across that and your homeowner's policy, as opposed to purchasing $1 million of auto insurance and $1 million of, you know, homeowners insurance. So there's different ways to do it. Your insurance agent should be able to tell you, kind of run the numbers, play with different things, play with deductibles, copays, things like that. But definitely, if you do nothing else, make sure that you have a comfortable amount of uninsured and underinsured coverage, because that, like I said, is something you can control, and it protects you from people who you can't control. You can't control how they drive, and you can't control what kind of insurance, how much insurance they get. So that would be my big recommendation. A couple things that I wanted to talk about that are sort of unique to Wisconsin that I've seen come up multiple times, unfortunately, is this. Here's a very common scenario. A couple has a couple cars, they have their auto insurance, they have children. You're, you know, maybe you've got $100,000. Let's say you've got $100,000 in insurance coverage. And for purposes of this conversation, we'll just talk about Wisconsin, because this is kind of a unique Wisconsin thing. So let's say you have $100,000 in insurance. You're a safe driver. You know, you're cautious. You're not worried about it. And you do that. And then let's say your oldest child becomes 16. They go get their driver's license. Well, in Wisconsin, to get your driver's license when you're less than 18, you have to have a sponsor sign it. Typically, it's a parent. And if one parent signs it, both parents are on the hook. Okay. And I think that's true even if the parents are separated and divorced. So 16-year-old in Wisconsin gets their license. The parent goes in and co-signs it and basically promises to be financially responsible for them. And the statute, I don't have the statute off the top of my head, but the statute basically says parents, the sponsor, typically the parent, is legally liable for any damages the child causes while driving up to $300,000. There never used to be a cap on that, but fortunately there's a cap. So now it's parents are on the hook for up to $300,000. If you only have $100,000 in insurance or $150,000 in insurance, you may be legally liable for that, and then you have to make up the difference out of your own pocket. And I've had multiple instances where I've represented parents in that situation where their son or daughter got involved in a crash and they only had $150,000 insurance. And they had to write a check. And because the way the insurance works, it's not like, let's say you have $150,000 in insurance. It typically doesn't work that your child has $150,000 and you get $150,000, and so together 300. No, it's typically only $1,000 limit that comes into play. So in Wisconsin, if you have a child driving in the house before they get 18, you might want to make sure that you have $300,000 of insurance, because otherwise you could really be in a financial hardship there if your son or daughter gets involved in a crash. And let's be honest, you know, inexperienced young drivers are just more likely to get involved in, I would say, a serious crash than maybe those of us that have been driving for a while. So that's something I really, really warn people in Wisconsin about, is to be aware of that sponsorship liability provision. Because your insurance, I've found that a lot of insurance agents aren't aware of that and don't tell people that they should get it. And the Wisconsin rules are such that you typically aren't going to be able to bring a claim against your insurance agent if they fail to tell you that, oh, by the way, you should get $300,000. It's kind of on you to figure it out yourself and ask for that coverage.
Yeah, that was my follow-up question, is could you sue the agent themselves? But no.
You can, but in Wisconsin, it's a pretty tough standard and you're probably going to lose that. So that's something I really like to encourage people. A few other things, things for people to keep in mind that I want to talk about is there are a number. So typically, does your insurance carry with you if you're not driving your vehicle, or if someone else is driving your vehicle? So let me try to answer that a little bit. If I have a car and I have it insured and I let my friend drive it, typically, and my friend gets involved in a crash, my auto insurance will cover my friend if they're driving with my permission. Okay. So that's something to keep in mind. If someone drives it without your permission, then your insurance may not cover them. But it should typically cover people that drive your vehicle with your permission. what you can't do, what you don't want to do is not tell the insurance company, oh, by the way, my 16-year-old son or daughter has a license now. They're going to exclude that. So this is people that are not in your household.
Oh.
Okay. So that's something to keep in mind is, now you're not typically legally liable to someone if you let them use your vehicle. Your insurance will cover them, but the other whoever gets injured typically can't sue you. They can go after your insurance, but they can't typically sue you unless, let's say, you had reason to know this person wasn't trustworthy, maybe they were intoxicated, maybe you knew they're horrible drivers or whatever, then maybe. But if they're just an average, regular person, they got a license and you let them drive your vehicle, you're typically not liable to them. Now, the opposite is actually true in Minnesota. I believe Minnesota actually is. If you let someone use your vehicle, you are legally liable for them. So that's something to keep in mind. So that's the situation where you let someone use your vehicle. Now, let's say you're in someone else's vehicle, or maybe the more common, let's say you're riding in an Uber. What happens then? So your insurance usually goes with you. Okay. So if you purchase insurance on your car, but you're riding with a friend and they get in an accident, your insurance should go with you. So like, let's say your uninsured and underinsured coverage is transferable. Your med pay, I'm not sure about your med pay, but your uninsured and underinsured should go with you and provide protection for you. And it should provide liability protection for you if you're driving your friend's car and you cause a crash. Okay. What you can't do is have an extra car that you don't insure. If you own the car, you have to insure it with your insurance company. Otherwise, there's an exclusion for that. So any questions about any of that?
Just a question. Are there any common policy exclusions that people get surprised by?
Yeah, and that's what I wanted to kind of cover next. So there are some common exclusions that people should be aware of, and I find oftentimes aren't. So maybe one of the most common ones is they're like commercial exclusions. So let's say you're driving for Uber, okay? Your auto insurance is almost certainly going to have an exclusion for you while driving other people around for pay. Now, you can haul your friends around if you're not charging them. But once you start charging people, there's probably an exclusion in your personal auto policy. I believe that typically Uber and the other rideshare companies, they have insurance for their drivers now, but your insurance is probably not going to protect you if you're driving. It also, if you're driving, for hire, it also, and this is a kicker, typically doesn't cover if you're delivering food. So if you're DoorDash, pizza delivery driver, I've had pizza delivery drivers get involved in a crash and come to find out that their insurance doesn't protect them, which I find that I think that's kind of sketchy that the insurance company, because it's not like you delivering pizzas makes you an unsafe driver unless unless you're in a hurry. I was at a trivia contest last weekend and this question came up, that Domino's Pizza, when they originally started out, they had this policy: the pizza is delivered in 30 minutes or less, or it's free. Well, they got sued. They got sued because drivers were like crazy. And so they had to drop that policy. So yeah, you can see how that might be something your insurance company doesn't want you doing. But you usually are not covered if you are delivering food and stuff like that. So that's something to keep in mind. There's typically what we call an intentional acts exclusion, road rage. So if you like run down your arch enemy on the road, probably not covered. If you're racing, if you're off-road, trying to think what other things. If you're driving, a four-wheeler on the road, you're probably, there's probably an exclusion for off-road vehicles. So those are some of the common exclusions that I see.
Is there any last portion about auto insurance that you wanted to speak about today, or any big takeaways or advice for our viewers listening, other than the ones you
Not really, but I think what I would tell you is if you purchase, because here's what often happens: we purchase insurance and then we just keep renewing every year and we just pay our bills and we don't ever talk. In today's world where you're not often dealing with a local insurance agent, you're dealing with some phone tree person, at Geico or Progressive or one of the big companies. They typically don't know what you need. They don't know these things. So you have to be kind of educated as a consumer and know
Mhm.
these things and be able to ask questions. And so I really encourage people, if possible, find insurance through an actual agent so that you can
Mhm.
have what we call captive agents. So let's say, they only do insurance for one company, or
Mhm.
what we call, if they're uncaptive or independent agents that can
Mhm.
write insurance for multiple different kinds of companies. Those are, I really encourage people to find an independent agent, because then they will, they're not tied to a particular company. They can
Mm.
shop around, and I think are usually in a much better position to answer questions about
Mhm.
what does your coverage mean? How much is it going to cost? Are there ways that we can, get more uninsured, underinsured coverage?
Mhm.
So, talk to your insurance agent, watch my videos, things like that. I've been thinking about doing this, and if people want to, bring your policy in, bring your declarations pages, send me an email. I'll be
Mhm.
happy to take a look at it and answer questions that I can for people,
Mhm.
because you only have insurance. Oh, wow. Screen just went black here. You only have yeah. So what is this? The screen switches from white to black.
That's weird.
So sorry about that. So you're only going to have insurance that you have when you paid for it. So once you get into a crash, you can't like you could raise your coverage for the next time, but it doesn't help you in the crash. So once a crash happens, you're kind of locked into whatever coverage you had. So it's really important to get that done before you have a crash. So you at least are educated and have full knowledge and consent to what your coverage is.
Mhm. Lacrosse lawyer in the dark.
Yeah. Yeah, that was weird. So anything else?
No. Alright. Is insurance liable for turning your lights off or screen off?
Probably not. That's my own fault. So,
That's
um,
exclusion.
yep. Yeah. So I hope people find that helpful, and I'll do more videos. So if people have particular questions about
Mhm.
that, let me know. Leave them in the comments, or send me an email. My contact information is always the description. I take great joy in helping people fix these things when they can still be fixed,
Uh-huh.
because there's nothing worse than having someone call me after they were involved in a bad crash and find out there's just not enough insurance here. That's just the worst thing, because it's very avoidable, but you have
Mhm.
to be proactive and whatever ahead of time. So that's my encouragement to people, to be proactive, to educate yourself and make sure that
Mhm.
you're doing the best that you can to protect you and your family.
Absolutely. Thank you, Craig.
All right.
Appreciate you sharing your information, experience, and offering to help anybody who needs it
Sounds good. Thank
or
you,
after.
everyone, for watching. Thank you,
Thank
Leah.
you.
Till next time, everyone. Have a good one.
Bye. Happy holidays.